what the record price of a tuna in Tokyo has got to do with the 2-degree climate goal, why we are headed for a 4 instead of a 2-degree climate scenario, and what are the consequences. What will be the world market price trends of commodities in such scenarios? Which countries will be the winners of such trends, which the losers? Reto Ringger, founder and CEO, is sharing his answers and insights in our current Globalance Webcast.
Mr. Ringger, in the background we can see a ticker. Is that your forecast for the Dow Jones Index, or what does this number indicate?
Maybe you know the debt clock, which is located in Manhattan in New York, which counts the public debt of the United States. This is a comparable number for the carbon emission. It's also based in New York at the Times Square. It gives us an indication of how much carbon we emit on a global level. Both figures are on an all-time high, and both figures are extremely important for our investment strategy. So that's why we have this number here.
1 month ago, the World Bank has warned us that we are, with respect to the global warming, moving towards a 4 degrees scenario. And also at the climate conference in Doha, the same picture has been painted. How serious do we have to take these warnings?
This is very serious. The political world has tried to go to 2 degrees on global warming, and unfortunately we're missing this objective. We're clearly moving more into the direction of 4 degrees, and we have here a graph that is indicating what is going on the carbon emissions. What we can see here is the last 10 years, and we see a steady increasing emission of carbon. We also see that is on the red line that the projection, which is the business as usual scenario, will go much higher, and we also can see that the 2 degrees objective, which is the green line, is unrealistic. So we will face another scenario. Economic growth is continuing. China is burning coal. They are burning 48% of the world reserves, only China. The US has discovered new fields on gas, shelf gas specific. So we have to adapt a new scenario, and instead of mitigation, we have to move more to adaptation, which also means we have to apply different strategies. So what does this mean? It means that so far we had very high-level discussions from the presidents, but in the future, when we enter the scenario of adaptation, we will have more action on a local level. An example is New York, where the mayor, Michael Bloomberg, has proposed to build some flood barriers. So we will see much more specific action, not on the state level, but on a very local level.
Is this 4 degrees scenario a worst case scenario of some politicians, or is it really going to be our reality?
Unfortunately, it's going to be a reality probably, and the numbers that stand behind it are sobering. If we want to achieve this 2 degrees scenario, then we can emit for the next 40 years an additional 565 gigaton of carbon. Now, today the proven reserves from the oil companies, the gas companies, and the coal companies amount up to 2,800 gigaton of carbon. And if they emit that, and I think we can count on that, then we will move closer to the 4 degrees. If they would not, then of course their shareholders would have huge losses with their share prices, and probably that's unrealistic.
Mr. Ringger, you and many others are convinced that this 4-degree global warming is going to be a reality. Is this warming going to affect all the countries in the same way?
No, the countries have very different patterns, and unfortunately it's not only global warming, but it's also the increasing debt they have vis-à-vis their own biocapacity. And we can see that on the map we have prepared here. This is 50 years ago, so it's 1960, and we can see a green map more or less here. We have only a red color in Europe, in India, in Egypt, and of course in Japan, because it was an industrialized country already at that time. The red color means they have a negative footprint vis-à-vis their own biocapacity. It's also interesting to see that China is still green, Russia is green, and also the United States. So they had a positive exposure or a plus in their biocapacity. If we switch now to the level that we have a couple of years ago in 2005, we can see that the colors have turned from green to red. Especially the United States, they have turned red, but also Mexico, North Africa, including Libya and Algeria, a big part of the Middle East, Saudi Arabia and Iran, but also Southeast Asia with Thailand. And the large part that has become red is China. And what is interesting from a European perspective, we can see the PIGS country, Portugal, Italy, Greece, and Spain, they are deeply red. So they're not only their financial debt is in a dangerous area, but also their footprint is very negative. And that's quite an interesting development we can see. So we can see from this map that the countries have very different environments when it comes to resource capacity, but also to weather pattern in the future, like hurricanes and storms. There was a recent example in the Philippines where was a strong storm, much stronger than Sandy in New York. We had more than 700 dead people, 800 are still missing. And a lot of the world production is in Southeast Asia, where we will have more storms. And we saw that last year when in Thailand, in Bangkok, was that huge flooding. A lot of the production in the computer market, hard disk, could not be delivered, and we will see more of that development. So from a global perspective, it also will have an impact on production capacities.
Talking about the global warming, we also have to look at the food resources. What are the challenges and the opportunities in that sector?
In the food sector, the challenges are twofold. On one side, we have increasing demand, and on the other side, we have declining supply. Increasing demand because we have, of course, population growth, we have different food patterns with the diet, more meat, more fish. Declining supply because of the depletion of soil, because of overfishing as well, and because of reduced productivity in the agriculture sector. And all of that will lead to rising prices, unfortunately. One very good example is the tuna. This is a can of tuna, 150 grams, and every day there is a tuna auction, a fish auction in Tokyo. And there was a record price this year for one tuna, 250 kilograms. And what do you assume was the price for this tuna?
Well, I would guess that 1 kilo of tuna costs about 5 francs, so I would think it would have costed about 1,000 francs.
Yeah, unfortunately, this is far off the real price. The price was 736,000 US dollars. So for a kilo, that would be 2,800 Swiss francs or US dollars. And for this can, it would be about 470 US dollars or Swiss franc. So it's really amazing what scarcity of resources can do to prices. We also see that in other food prices, wheat, rice, and also soya beans, for example, but also with metals like iron or copper.
Talking about declining resources, what are going to be the implications for investors and for corporations?
Let's take an example, a company like Nestlé and increasing food prices. We have here the food price of rice since the 90s, and we can see that the price was volatile but more or less stable in the 90s, and then since 2002 prices have dramatically increased. And of course a company like Nestlé, they have to secure food production for their own survival, and the prices, the costs of goods they have purchased in 2011 last year have increased by more than 10%, but they only could pass 1.6% to their consumers. So they really have a challenge here with increasing food prices. So a conclusion here is that the food companies like Nestlé, like Danone or like Unilever do have a very different strategy in that respect, and we have seen that this is very important and gaining more importance. So investors have to look very carefully what the strategies of the companies they are invested in.
Now, we have a financial crisis, we have unstable markets, and investors want to avoid risks. Where should they invest? What would you suggest?
Yes, investors not only have the challenge of the financial crisis, it's also about resource scarcity, as we have seen in global warming. So there are three main findings out of the analysis that we have seen. The first finding is that global warming, resource scarcity, especially, is a mega trend. It's like demographics. We know that this is coming and development is going in this direction. So one recommendation we have is check your portfolio vis-a-vis those risks. Globalance Bank has a portfolio check which exactly does an analysis on those risks. Another finding on that specific topic is we're in a scenario of adaptation rather than mitigation. We have seen that, so people and corporations have to adapt. And there, our recommendation is invest in sector leaders, invest in companies that have done their homework. One example is Siemens with building efficiency. This will be a huge market to build more efficient, energy efficient buildings. And the third finding is there will be new markets. Think of Facebook and social media, also in other sectors like recycling, like buildings, like decentralized energy systems. There will be new companies. One company that we have invested in is Marico. That is an Indian mid-cap company actively in the food market and personal care market. The company is growing very nicely. The share price has increased from 140 to 220 last year. And if you invest in a diversified way in such companies, you can benefit also from those trends.
Thank you very much, Mr. Ringger. As usual, you can find all these informations on the website of the Globalance Bank. Enjoy investing!